On behalf of IDEA, I welcome all participants to this earnings call. Today, our Board of Directors adopted the unaudited results for the third quarter, October to December of the financial year 2017-18. Press release on IDEA's third quarter results along with company's quarterly report have been uploaded on our website, and I assume you had a chance to go through the same. My opening remarks will cover the key long-term structural changes in the mobile sector and how Idea Cellular is gearing itself to operate in the new paradigm, while Mr. Akshay Mundra, the company CFO, will provide details on Idea's financial performance during the third quarter. First, quarter impacted by reduction in interconnection usage charge. Effective 1st October 2017, TRA amended the domestic interconnection usage charge settlement regulation, reducing the mobile termination charge from 14 paisa to 6 paisa per minute, aggravating the financial stress of the industry. The regulation imposed 57% sharp decline in IOC settlement rates, negatively impacted Idea's revenue and EBITDA for this quarter by rupees 8,200 million and rupees 2,300 million respectively when restating Q3FY18 revenue at the rate of 14 paisa MTC. Further, effective 1st February 2018, international mobile termination settlement charges are also revised from 53 paisa to 30 paisa per minute. We estimate this IOC settlement rate cut will negatively impact Idea's Q4 FY18 revenue by nearly rupees 650 million and EBITDA by rupees 400 million in the 2-month period at constant traffic levels. Both the domestic and international MTC downward revisions remain a body blow to all operators and reduces investable funds for the critical Digital India program. Additionally, the international IOC rate drop only benefits the foreign operators with no commensurate benefit to Indian consumers, but with significant foreign exchange and revenue loss to the Indian exchequer. We are perplexed by the recent TRA's decision on international IOC rate reduction. Second, with proliferation of unlimited voice bundle with data plans, India is moving towards an astronomical high-volume, low-rate mobile market. Since the introduction of unlimited free voice bundles with data price plans from April 2017, the consumption habits of the Indian mobility users have undergone a seismic shift. As Indian consumers graduate to a higher priced bundle plans, the mobile service consumption trends are shifting from snacky to buffet, with marked higher per subscriber usage. Based on internal estimates, India has now nearly 290 million subscriber base as on Q3 FY18 end, who have chosen one of the top 4 telecom operators' bundle plans offerings. Just in 9 months, nearly 25% of Indian mobile users have migrated to unlimited bundle voice and data plans. With increasing popularity of these plans among Indian mobile users, we estimate within next 2 years, the penetration could rise to as high as 50%. The high consumption of such unlimited plans has significantly increased the overall mobile voice and data usage. The adoption of these plans have led to explosion in voice volumes, with Idea's sequential quarterly voice minutes growth at the rate of 10.8% in Q3 FY18 versus 1.7% in Q2 FY18, highest in the last 30 quarters. The mobile data volume also witnessed robust sequential growth of 30.2% on back of sequential quarterly growth of 73.5% in Q2 FY18 and 99.1% growth in Q1 FY18, as Idea's pan-India data network carried 571 billion megabytes of data volume this quarter, a whopping 5.3 times of mobile data volumes compared to 1 year back in Q3FY17. However, such unlimited plans continue to erode mobile voice and data realization as the voice realization rate, including the impact of reduction in IUC rate, sharply declined by 24% to 16.8 paisa per minute. The mobile data realization rate also fell to world's lowest tariff at the rate of 2 paisa per megabyte, a sharp decline of 27% versus 2.7 paisa per megabyte in Q2 FY18. As the initial adopters of these plans were primarily from Idea's high ARPU base, the increasing adoption during the early phase has led to ARPU declines. We are confident that subsequent takers of unlimited plans from existing Idea consumer base will be value accretive as casual and multi-SIM consumers will begin to commit larger spends to the companies on these bundle plans. Third, rapid mobile industry consolidation is leading to SIM consolidation. Significant financial pressure over last 18 months has forced subscale operators to exit or combine with other operators. This is leading to faster than expected mobile industry consolidation, with market shifting from crowded 9 to 10 operators market to a more efficient 3 to 4 operator industry, leading to encouraging long-term prospects from the surviving operators. The announced closure of RCOM prepaid services from December 2017, planned merger of Tata Tele Services and Telenor with Bharti, and Aircel closing services in 6 circles has led to first phase of market consolidation. Thus, after reporting positive net additions of 16.7 million in Q1 FY18, the telecom industry registered 24.4 million subscriber decline between July to November 2017 on the back of loss of 62 million customers by smaller and exiting operators. As on 31st December 2017, Idea's overall subscriber VLR base has crossed the coveted 200 million milestone and stands at 203 million. Resultantly, Idea improved its subscriber VLR market share to 19.8% in November 2017. Unlimited plans are further paving the way for second phase of SIM consolidation, as consumers who earlier used to split the usage on multiple SIMs are now committing all their usage to single SIM after opting for a fixed period unlimited plans. While the usage is shifting to single SIM, customers are not relinquishing their other SIM due to multiple reasons, including wide distribution of their other mobile number, the SIM being linked to bank accounts, or just to avail of various promotions and discounts available in future via other SIM. This is leading to a phenomena where subscriber VLR numbers are still healthy, but revenue-generating subscribers are falling. Having realized this emerging new trend, Idea has quickly focused its attention from VLR-led subscriber growth to revenue-generating subscriber growth. Our new internal norm for revenue-generating subscribers is to drive Idea's sales, service, and marketing teams focused towards at least rupees 25 ARPU generating customer. To achieve the required focus on revenue-generating subscribers, Idea's current strategy is A. Build a company-wide culture of selling unlimited voice and bundled data plans. B. Launch of attractive postpaid Nirvana plans to choose against prepaid unlimited plans with feature-rich postpaid portfolio, including data rollover up to 50 gigabytes, free Idea phone security, cumulative family member discount, premium services, customized family tunes, etc., besides unlimited voice bundles with mobile data. C. targeting low and pure incoming customers who are currently in the non-unlimited category, with aim to upgrade to rupees 25 to 150 ARPU levels through a series of tariff and product interventions. Fourth, India is evolving as the world's largest minutes market. Increasing adoption of unlimited plans is driving huge consumption in voice minutes. As per TRI Q2 FY18 report, industry voice volumes reached 16.8 billion minutes a day, a staggering growth of 36% year-on-year. India is now clearly the world's largest consumer of mobile voice minutes. Idea's usage per subscriber has increased by nearly 32% year-on-year in Q3 FY18 and now stands at 509 minutes per month. Further migration of subscribers to the unlimited voice plans will continue to drive usage per subscriber, leading to continued growth in industry voice traffic. The company is moving fast to roll out its own voice over LTE services to the 58 million strong 4G handset owners and remains on course to introduce Idea's voltage services from March 2018 onwards in the main markets. We expect to offer voltage services across all Idea's 4G towns in calendar year 2018 itself. Fifth, new subscriber growth after SIM consolidation. While existing customers consolidate their multiple SIMs, nearly 300 to 400 million Indians who are currently do not use any mobile services are at an inflection point to enter the voice category, primarily on 2G network, aided by falling outgoing consumer tariffs and availability of 2G feature phones for as low as rupees 300 to 500 rupees per handset. Idea and Vodafone India combined will have the deepest 2G network presence, covering an expanse of over 1.1 billion Indians across 500,000 towns and villages, and is best positioned to be the biggest beneficiary of this impending growth. Sixth, wireless broadband subscriber growth has just begun. As per TRI Q2 FY18 report, India has 306 million mobile broadband users as on 30th September 2017, an impressive addition of 133 million wireless broadband users over last 1 year. As mobile broadband data coverage becomes ubiquitous and 4G services become increasingly affordable for the masses due to steep decline in tariffs from over rupees 150 a year back to current levels of 20 to 25 rupees per gigabyte, the country is poised to accelerate and add nearly 500 million wireless broadband users in next 3 to 4 years. Idea mobile broadband subscriber addition of 5.2 million this quarter has been highest its wireless broadband subscriber customer addition, as company's broadband data users base reached 34.8 million out of the 42.6 million data users. Seventh, India is among the highest per sub consumption society on data as well. Seeds of digital revolution, which will permanently transform India into a digital society, have been sown. Data consumption per subscriber has witnessed a meteoric rise largely on back of unlimited bundle plans. Industry data traffic, as per TRI Q2 FY18 report, has witnessed a massive explosion as volumes grew by more than 7.5 times in less than 1 year. For Idea, the introduction of unlimited bundle competitively priced data plans has led to a sharp rise in Idea's data subscriber usage per month from 700 megabytes to nearly 4.8 gigabytes in 1 year, far higher than the global average. B, in comparison, the mobile broadband data usage by Idea's broadband subscribers has risen to 5.7 gigabytes per month against a meager 971 megabytes usage a year ago in Q3 FY17. 8. Increasing adoption of 4G smartphones. Proportion of 4G smartphones being shipped to India on an annual basis has risen to 50% of the total phones in calendar year 2017 from 12% in calendar year 2015. As 4G shipments rise, Idea continued to gain its fair share in 4G device upgrades as the company added 38 million 4G smartphones on its network over past 1 year. With usage consolidating to one SIM in the unlimited bundle plan era, the marketplace battle has now shifted for first SIM slot for the 4G services. Idea has nearly 58 million 4G devices on its network, which provides it a significant revenue opportunity as we encourage our customers to move Idea SIM to the first slot. To achieve this, Idea is working closely in partnership with 4G device manufacturers and its ecosystem. It is tied up by offering additional data through e-commerce companies such as Amazon and Flipkart for their new 4G handset models launches from Oppo, Vivo, and its own brand, etc. B, rupees 1,500 cashback offer on range of entry-level 4G smartphones from Carbon, Xiaomi, priced at less than rupees 5,000, provided customers stay and continuously use Idea's network over 2 to 3 years. Ninth, broadband investments to support exploding data demand. Over the period of last 2 years, Idea has aggressively expanded its wireless broadband infrastructure and added 96,020 broadband 3G, 4G sites. Idea has multiplied its mobile broadband sites by 3 times in last 2 years, and the overall wireless broadband sites now stands at 143,565, much higher than its 2G sites. This quarter, also the company integrated nearly 10,000 broadband sites, including TDD capacity sites on 2300 MHz spectrum band in leadership markets. As 4G consumption adoption rate continues to rise, supported by affordable smartphones and world's lowest voice and wireless broadband tariffs, almost all of Idea's incremental network capital investment is allocated towards 4G expansion, including fiber and capacity. The merged Idea and Vodafone India together is capable in future of multiplying existing Idea capacity by 8 to 10 times. Presently, both companies' technical teams are planning the future-proof architecture needed to execute aggressive 4G coverage and capacity post-merger. Idea's board has decided to revise this year's capex investment guidance upwards from rupees 6,000 crores to rupees 7,000 crores for execution till 31st March 2018. Also to remind, post-completion of Idea-Vodafone India merger, the combined entity will hold amongst the largest spectrum block of 1850 MHz with 1429 MHz spectrum earmarked for mobile broadband services capable of supporting over 163 high-speed internet broadband carriers. During the pendency phase of merger, Idea and Vodafone India have entered into an active infrastructure sharing arrangement to avoid duplication of network spends by both operators and thereby optimize our capex. Besides active infrastructure sharing in mobile broadband demand markets, both companies have entered into 4G ICR arrangement and expanded the scope of existing 2G ICR arrangement to offer services across 12,500 new towns and neighboring villages where one of the two operators previously did not have presence. 10th, Idea transforming from pure play mobile operator into integrated digital services provider. The update on Idea's digital services adoption include A, 14 million infotainment apps installed till date with 2 million plus minutes of daily video viewing. B, news and magazine services app launched in November 2017. Idea is also making serious efforts to increase consumer recharge and postpaid bill payment on its 27 million plus Idea self-service app and interactive website. Nearly 15% of Idea's revenue is now being managed through the digital channel. To encourage more customers to shift to digital sales channel and break current retail habit, Idea offered up to 100% cashback on unlimited plans recharges above rupees 357. In January 2018, the company has also introduced Magic Cashback digital offering with benefits of up to rupees 3,300, including cashback vouchers over 8 subsequent recharges, wallet-specific cashback, and shopping coupons on e-commerce sites for customers recharging through digital channels with rupees 398 and above value. 11th, Idea is in the process of raising up to rupees 67.5 billion equity to strengthen combined entities' balance sheet. On 4th January 2018, the Board of Directors approved issuance of 326.6 million equity shares at a price of 99.5 per share on preferential basis to the promoter group entities for a total consideration of rupees 32.5 billion. Idea's board has also constituted a committee of board members to evaluate potential routes for raising additional equity capital of up to rupees 35 billion, including, among others, through further preferential issue, qualified institutional placement (QIP) or rights issue, etc. The proposed capital raising of up to rupees 67.5 billion will reduce Idea's net debt, and as a result, Vodafone's net debt contribution to the merged entity will also be lower by the same amount. This, along with recent sale of standalone tower business of Idea and Vodafone India for rupees 78.5 billion and potential monetization of Idea's 11.15% stake in Indus Towers, will augment the long-term capital resources of the combined entity. 12th, preparing for merger within the regulatory framework. Idea and Vodafone India have jointly set up a combined integration steering committee which acts as a central decision-making body for integration. As a part of integration process, 17 different work streams across various functions have been mobilized for review of existing practices and processes and decide subsequent steps for integration. Each work stream is responsible to generate A. Day zero discretionary and non-discretionary items, B. Recommendation on interim and end state, and C. Pre-close actions required to achieve the same. The company is happy to share that Idea and Vodafone India merger is progressing at a pace faster than our original estimates as we enter into final stages of regulatory approval. 13th and final, short-term strategy of Idea to operate in the new paradigm. Presently, company is focusing on 5 key strategies for revenue and profitability revival. Number 1, early completion of merger and expedite integration activities and focus on fast-forwarding scheduled OPEX and CAPEX synergy. Number 2, shift company's consumer growth focus to revenue-generating subscribers, delivering minimum rupees 25 ARPU instead of VLR-led subscriber growth only. Number 3, convert higher percentage of existing Idea customers to unlimited bundle plans and feature-rich postpaid Nirvana plans. Number 4, target aggressive cost reduction program across all OPEX line items. And number 5, transform Idea to an integrated digital service provider. Idea remains focused on execution of all these market-facing programs and strategies. I now hand over to Mr. Akshay Mundra, Idea's CFO, for details on the financial performance for the quarter.
Thanks, Himanshu. A very good afternoon to participants from India and a good morning or evening as applicable to overseas participants. During the quarter, we saw continued and increased migration of subscribers to unlimited products, resulting in significant increase in data and voice traffic. The sharp reduction in interconnect charges, which became effective from October 1, impacted Idea's revenue and EBITDA for this quarter by approximately rupees 8.2 billion and rupees 2.3 billion respectively. As a result, revenue for the quarter declined by 12.8% to rupees 65.1 billion, out of which approximately 11% decline is on account of reduction in interconnect rate. The balance 1.8% revenue decline is largely on account of ARPU dilution resulting from migration to unlimited plans. Similarly, EBITDA for the quarter declined by 18.5% to rupees 12.2 billion compared to rupees 15 billion in Q2FY18, out of which decline of approximately 15.3% is on account of reduced interconnect rate and balance 3.2% is on account of revenue decline. The EBITDA margin for the quarter stands at 18.8% against 20.1% in Q2FY18. The depreciation and amortization charge and interest and financing cost net stood at rupees 21.4 billion and rupees 11.5 billion respectively. During the quarter, 2 MHz of 1800 band spectrum in Maharashtra and 10 MHz of 2300 band spectrum each in Maharashtra and Kerala have been deployed. This has resulted in higher spectrum amortization of rupees 150 million and higher interest charge of rupees 250 million in this quarter. The standalone PAT loss is rupees 13.5 billion in Q3FY18 compared to a PAT loss of rupees 11.8 billion in Q2FY18. As regards the sale of ICISL stake, the asset and liability values of ICISL are currently shown as separate line items as assets or liabilities held for sale, respectively on either side of the consolidated balance sheet. The net asset block of ICISL stands frozen effective the date of the stake sale agreement, that is November 13, 2017. In effect, the depreciation and amortization of ICISL assets beyond the date of agreement does not get aggregated while drawing up the consolidated financials. Such amount for this quarter is rupees 177 million. The gain from the ICISL stake sale will be reflected when the transaction is finally consummated. Net debt at the end of Q3FY18 stands at rupees 557.8 billion against rupees 540.5 billion in Q2FY18. The proposed capital raising of up to rupees 67.5 billion will reduce Idea's net debt. With this, I hand over the call back to Margaret and open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sachin Salgaonkar from Bank of America. Please go ahead.
Hi, thank you for the opportunity. I have 3 questions. First, if you guys would give a bit on clarity on, the sense of down trading, how, is this largely behind us and how should we look at it? And any broad direction about number of users using bundle packs would be helpful. Second question, Akshay, we did see across the board cost line item reductions. Wanted to understand how sustainable is this, and if there are any one-offs, please let us know. And third question is on your capex guidance. Can you help us understand, where the spending is coming? I understand it's 4G, but is it predominantly on fiber or more equipment being rolled out? And I presume it is all pre-merger. So post-merger, how should we look at the overall capex spend? Thanks.
Thank you, Sachin. You are absolutely right. From the time unlimited bundle plans have been the order of the day, especially for Idea, which has started to match mass market plans. Our high ARPU customers have tended to downgrade themselves, and their ARPU has declined from the earlier higher levels to the present levels. As of our estimate, we did that calculation at the end of the quarter. We have found that most of our high ARPU customers have already downgraded, and the current round of customers that we are now getting are customers who are upgrading their usage. Either they were casual customers or most likely they were multi-SIM users who have now started to consolidate their revenue to one operator, and in this case, when choosing Idea to us. As regards total volume or total number of users, we have approximately 20% of our overall base which have chosen unlimited plans. If this is okay, I will hand over.
Yeah, this is clear.
So, Sachin, on the cost side, I think we are focused on cost optimization also, and there is one-off in this quarter, which is under network expenses, which is an amount of approximately 1.1 billion rupees, which represents a reversal of old provision. Other than that, there is no one-off in this quarter.
Okay, and Akshay, you see this sustaining going forward, the current OPEX levels?
Yeah, except for the one-off which I just mentioned.
Okay, got it.
As regards CapEx guidance, it's a combination. You're right, the complete 1,000 crore incremental expenditure which is going to happen in Q4 is planned on 4G. It's a combination of three things: enhancing our overall capacity for the company. Second is additional radios. The radios are focused to be installed in most of our leadership markets, and a small amount of fiber. I have to keep reminding you, we've already given updates on progress as far as ICR arrangement both on 4G as well as 2G ICR with Vodafone, and third on active infrastructure sharing. There is a great deal of work which is happening on fiber sharing, and a lot of capacities of a very significant order of fiber sharing has already progressed. Some of it was executed in last quarter, but a large portion of the same is going to be executed in this quarter. So if you were to look at combined fiber of us, and if I were to not eliminate the overlapping fiber, we have over 3,25,000 to 3,40,000 kilometers of fiber without eliminating the overlapping fiber. And a large amount of capacity is there, but just in installing end equipment, we are able to now upgrade a large quantum of capacity.
Okay, sir.
Okay?
Yes, sir. And the post-merger, how should we look at it?
Post-merger, currently, we are a listed company. We give CapEx guidance. So you have a 7,000 crore. Though there is no official figure, but Vodafone expenditure is of a similar order. So the current levels of spend that we expect to maintain that level at a minimum. But along with that, there is a significant portion of CapEx synergy, and the exact quantum will be shared post the merger. But it is a very large component of CapEx synergy, and that comes out of overlapping equipment which is going to be used, and a very small component of reinstalling those equipment will be there. So if you have to read our CapEx guidance, it is not only about the total expenditure, but also a large component of capital equipment which is overlapping by nature, which will be reused. We will have to count it on the CapEx. Akshay, you want to add into this?
And sorry, just a small follow-up on that. Today we saw 1.5 GB packs being launched by a couple of your competitors. If directionally that is the way market is moving up, and given the fact that in next few years a lot more data consumers will be coming, so not only it's more consumers who are coming, but consumption per usage is also increasing. Then from that perspective, do you see upside as to your generally your guidance of maintaining this? I understand the capex synergies as well as the spectrum enhanced benefits coming out of it. But are there any general upside risk, or if you could quantify the kind of amount which is needed overall over a period of next few years to basically ensure that the network is capable of handling a lot of load?
So there are 3 or 4 parts. You have to see this answer to this question in individual parts. Part number 1 is, as we speak, both the companies have deployed anywhere between 400 to 500 megahertz of spectrum for broadband. Once it is a consolidated company, it is going to deploy out of the 1850 megahertz of spectrum, 1429 megahertz spectrum. And a large portion of TDD spectrum has yet not been deployed, which is going to get deployed. So that is one big benefit that is going to happen. But if we leave the topic of TDD, where definitely capex is required, but there is a overlapping spectrum which is currently being used for GSM, and we are expecting to be able to pull out a significant number of carriers, which has table of the same has been shared in our investor presentation at the time of merger announcement, which will increase the FDD carriers, especially on 1800 and 2100. This is the part one of the answer. The second part is to remember, as besides worry about capex for building a mobile data business, the construct of our subscriber base is very different from the construct of the new entrant subscriber base. His subscriber base is 100% 4G subscriber. Our subscriber base has a component of 2G, 3G, and 4G. Over a period of time, a lot of these subscribers will migrate to 4G, but all of them are not going to migrate to 4G and will continue to be able to use 2G and 3G. So, as I mentioned, I have a 20% of my subscriber base which is moved to bundled plan, but that is not equal to all of them as 4G subscribers. A large portion of them are currently on the 2G and 3G platforms and are happy to remain on them and use the benefit of unlimited plans, predominantly voice consumers. So to be able to assume that every unlimited plan customer is a heavy data user, I think is a mistake from the fact that it is most of them are not 4G. So even though then the third point, even though Idea has approximately 25% or 26% of its consumers which have 4G handsets, but our current user base on the 4G platform is much lower, and our current user base is on the 2G, 3G platform. So this is the third part of the answer. The fourth part is we have a lot of synergies that is available for a very small component of capex. We are going to be able to unify the two fiber networks that exist across all towns, and the unification of this fiber network in one go is going to allow us to be able to move from a level of 150,000 kilometers to a level of at least 250 to 275,000 kilometers, and give us a huge capacities from the backhaul capacity. So our capex requirement is predominantly on for the radio front, and a significant portion of fiber benefits will accrue from this merger. So these are some of the factors that are important, but we will continuously review the total requirement of. Having said that, there is merit that there is a huge demand for data that is coming in, but how much is the final numbers of demand for data comes in should be the allocation of capex. We are not a believer of spending capex much ahead of time and waiting for volume to come.
Got it, sir. Thank you.
Thank you. We would request participants to limit your question to 2 at a time. We'll move to our next question, which is from the line of Manish Adukia from Goldman Sachs. Please go ahead.
Yes, hi, good afternoon, and thank you for taking my questions. My first question is just on the pricing environment. Now, Himanshu, you mentioned that a lot of your high ARPU customers have already downtraded, and you're seeing some current round of consumers upgrading usage. But how do you see that changing with the recent volatility in pricing that we've seen in the last 2 or 3 weeks? Do you think that now there would be further downtrading of ARPU in the industry? And what is your strategy for it? Would you continue to match, the new operator in terms of pricing, and how do you see that going forward? Second, if you can just comment on your balance sheet, I think net debt to EBITDA is now close to 8 times, and while you have announced some deleveraging initiatives, tower sale and capital infusion, by when does the management expect Idea's balance sheet to get to more comfortable levels of, let's say, 3 or 4 times? And if you can provide some roadmap to that, that will be great. Thank you.
Thank you, Manish. I will try to answer the volatility in the pricing, and I would ask Akshay to be able to give details on the balance sheet. Yes, you are referring to some of the events which has happened over the last 2 to 3 weeks. As regards movement of unlimited plans in the past, which was steadily the prices are improving to what has happened over the last 2 to 3 weeks. So first and foremost, if you notice, it is a battle between the new entrant and the leader, and both, as far as idea is concerned, we have stated it earlier, and we are going to restate at this point of time that we are not a price warrior in the marketplace. So our focus remains long term rather than over worry about the short term. Our assessment, first and foremost, as far as long term is concerned, the long term trend of telecom remains extremely positive, and it is a minor aberration which in a short period of time should correct itself. This is our estimate that it is only a matter of time. These prices will go back to the earlier levels and will return back to growth levels and prices to recover back, primarily because the current unlimited price plans that have been announced are far below cost levels. Now, the second part, we have to remember that if you look at, and I alluded in my speech, you look at India has approximately 800 million handset users. Out of these 800 million handset users, anywhere between 225 to 250 million of the handset users are on 4G. And 65 to 70% of the users are with the new entrant and they're using new entrant network. So all downward revision is predominantly going to hit their revenues. Idea has 2 or 3 options to operate till we pass through this volatile phase, which is something that we have done in the past. First and foremost, if you in the past, we used to run a differentiated strategy between offerings for 4G versus offering for 2G, 3G, because 2G, 3G customers are predominantly looking for better value on their voice networks. And we will continue to evaluate whether this will be our strategy that has not yet been concluded, but this is one of the options that exists to us. Second, we have to remember that it is not only about we are also making very, very strong attempts that we signal out clearly in the marketplace that we do not want to participate in the present level of price drop, and any possibility of raising prices, we will give out signals in the marketplace so that harmony can return back to the market. So we are going to continuously signal in the marketplace that we are not there to be able to continuously bring prices down, and we will prefer that we have a far stabler environment. And reason for that is the industry needs to continuously invest. There is a very large volume demand for both voice. There is a very large volume demand for data services, and it is important that the investment in digital continues. For Idea, the focus remains its merger. It will continue to be able to put all its attention on the integration. It continuously wants to be able to carry out all necessary work to expand both its coverage and capacities, and do not want to be a price warrior. So we will maintain reasonable distance. If you have to look at the ARPU levels we are getting for unlimited plans versus ARPU level that has been announced by unlimited plan by new entrants, as per our internal study, we find that our ARPU levels are anywhere between 50 to 75 rupees higher than the ARPU levels that the current new entrant is offering. So clearly, we have maintained in the past much higher price levels, and we will continue to signal the same. And we are very hopeful that the volatility that has happened over the last 3 weeks will over a period of time harmonize, and both the leader and the new entrant will settle and the market will go back to its final growth momentum. So the market has to correct itself, and we are very confident that it is only a matter of time this will happen.
Manish, you're right that the net debt to EBITDA ratio is at a fairly high level. There are only 2 points I would want to make there. That one is this high level of leverage is primarily arising out of decline in EBITDA and not so much because of increase in debt. And in such a situation, there is not very much that you can do. So the recovery of the leverage ratio would largely happen by way of recovery of EBITDA as the market repairs. For the current point of time, we are focused that the business should be adequately funded to make all the investments that it needs to make and to service its debt obligations. And that is why we have taken all the steps to make sure that we have adequate funding available for the foreseeable future.
Right. Thank you so much, Akshay. Himanshu, I just had a quick follow-up on your comment when you say that you're confident that the market will repair itself and it's only a short-term aberration. What gives you that confidence in your view? What would be the key driving factor for the new entrant and Bharti to, stop the price war and raise prices? So what do you think will be the key catalyst for that, or for them to actually stop the price war and raise prices?
So whenever the price drop, due to the fact that we spend over 2 decades in the industry, whenever the price drops happen and the rate falls, the market does not recover, and the revenue decline will be very steep for both the companies. And for what gains? Because the current prices that has been offered is getting in very good demand from the consumer side. So the consumer demand is itself very, very robust. That is part one. Part two, the battle is for 4G. And 4G, if you look at 2017 calendar year shipments, was to an order of 125 million. Approximately 10 to 11 million handsets are coming in. There is no doubt there is an announcement of incremental handsets that are going to be brought in on the feature phone. But the consumption of handsets is at a level of 10 to 11 million overall handsets. So there is only a particular pace at which the growth will happen. The universe on 4G currently remains much smaller, and the price drop only hurts both these companies without commensurate gains, because it's a battle. It's not that the 4G handsets are lying anywhere else. So they were earlier a battle to go to in the consolidation phase, SIM consolidation, when the smaller or subscale operators were exiting and their subscribers could be acquired by making aggressive offers. So because there is not sufficient customers on the 4G front, this battle is not going to give you commensurate gain for the price drop. So the volumes are not going to give you the growth, and it will only be depletion of revenues. So that is the reason why I'm very hopeful, in fact, to a fair degree of confidence that it is a passing phase. We have to be patient enough to let this phase pass through, and we will be back to recovery.
That's very helpful. Thank you and all the best.
Thank you. We would request participants to please limit your question to 2 at a time. We'll move to our next question, which is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Sir, sorry, but we'll continue the discussion which we just did on pricing. How much premium compared to Jio are you comfortable with? It looks like Jio has cut prices because both Bharti and Idea got very close to their pricing. While you do not want to be a price warrior, you seem to be having little choice. And if you don't respond, the market share will keep eroding. Because you already have the 65-70% market share in 4G. So what will be your 4G market share aspiration? That's question number 1. So if you can answer that, I'll go to the next question.
Kunal, if you last quarter, Idea has added over 16 million customers on unlimited bundles. and our key strategy has been 179 rupee plan. What is a 179 rupee plan? It is an unlimited voice and have a very limited data, which is 1 GB of data. So if you look at volume growth of voice, if you look at volume growth of data, it will be very evident that we are focusing on customers who are good voice users and also need data. We are not focusing on customers which are the younger audience who are deeply into data business. So with this has a reasonable success. We will continue to be able to focus most of our energies on unlimited voice with limited data volume, and which is where customers from 2G, 3G as well as 4G who don't have time to be able to spend all the while to be on internet will continue to choose networks like ours because our pricing will remain competitive. While there will be a second battle for customers who are very heavy users of data, and an incremental volume that you're getting is not getting you extra ARPU or not going to So our strong belief is that there is a segment of customers which are heavy users of data and can consume as much volume as they can, but there is also a much larger mass of customers who need their data services for half an hour or 1 hour of need per day, and they are mid to low end data requirement, and we will be able to satisfy that requirement reasonably well. As far as pricing is concerned, it is very difficult to be able to peg down to a specific number that you are wanting us to do. We want to be competitive, but we don't want to be price warrior. So we will make every attempt to indicate that which will allow the new entrant to go back on his old prices. That we will make every attempt to make market indications and offer him opportunity to go back to other prices.
Sure, thanks. Himanshu, second question.
This is within the framework of law. I'd like to put that in a. So we do not want to bring our prices down from that perspective.
Understood. Thanks. Second question. Now you mentioned that you want to focus on customers who are paying more than 25 rupees. So what proportion of your customers are paying less than that, and are they mostly dual SIM customers? So they are paying someone else, and that's why they're not paying, or these are really low end users?
We have the numbers, but we don't share that information in the public space. So there are both types of customers. There are customers who are happy to use purely incoming, but a larger proportion of these customers are definitely dual SIMs. They have chosen somebody else's unlimited plan, but they continue to be able to have the second SIM because that SIM is linked to their bank account number or Aadhaar number, or they continue to look for other offers. So there's a combination of both the subscribers. There is also the third category of subscribers who can afford an X amount of money. So there is a significant price differential that currently exists for customers who chooses an unlimited plan versus a customer who does not choose an unlimited plan. So the customers who don't choose an unlimited plan, so we want to bridge the gap for customers who choose an unlimited plan versus customers who don't choose an unlimited plan. So there are consumers whose usage is only 200 minutes and does not require an unlimited plan. But there the realization may be significantly higher, and we will want to make him comfortable to be able to stay on our network, use the 200 to 400 minutes with us, and get his ARPU improvement. So those are the customers that we're targeting, which is the mid to low end customers. And we've seen whenever we do a specific product intervention, whenever we do tariff intervention, and all of them don't need to be done at unlimited levels, there is a significant number of them who return back.
Understood. And one last question, if I can. Like network cost, it's gone down sharply. Like even if I adjust for the one-off, it's down like about 10% year on year. What's driving this decline? Because we haven't seen any meaningful decline in 2G sites. 4G sites you're adding in large numbers, so loading should be increasing. So can you, and also diesel cost has increased over the last 1 year. So what's driving the sharp decline in network cost?
So let's say it's not a single large item which is determining these costs. Let's say the energy costs have improved on a per site basis. Of course, with expansion, there is some increase on a increased number. But if you will see that from March onwards, our 2G sites have also come down marginally, so that is helping. There's a lot of work being done on the maintenance cost of equipment, and that is being optimized. I think there are some renegotiations which are also happening with the different vendors who are providing services. So it's an all-round effort. There is no single item which will stand out. But and also in the head which you see is actually network and IT cost, and there's a significant improvement which is also happening on the IT cost.
Understood. Like rentals, there is no change, right? There is
No.
Okay. Great. That's it from my side. Thank you.
Thank you. The next question is from the line of Srinivas Rao from Deutsche Bank. Please go ahead.
Hi. So thank you very much. I have two questions. Can you throw the light on this VLR versus RGS subs again? I think someone asked, but it will be helpful. What exactly are you trying to do there? If you can help, that's number one. Secondly, on your cashback, how is the accounting for cashbacks? Do you take the impact, probable impact in the current ARPU, or do you take it as and when the cashback will be, so to say, taken by the customer?
Okay.
And finally, one question on the subscribers who have 4G devices but are not your broadband subscribers. That number is, based on your own disclosure, probably about 60-70 million. I mean, what are these? I mean, are these simply looking at 2G, 3G on your platform, or they probably have a data plan from someone else? Any feedback on that, and how do you intend to bring them to Idea Fold would be helpful.
Yeah. So, Srinivas, let's go step by step. What I was trying to tell you between VLR and revenue generating subscribers. In the past, VLR was a right KPI measure for revenue growth. What has changed over the last 2 quarters, that just getting a customer on VLR may not be sufficient, because you may be adding a customer on VLR. He is on a multi-SIM device, and he can become predominantly incoming user, or he has chosen to use that SIM card for getting all his approvals and regulatory, and not using it as a main device. So what we have, after a deep study, one of the reasons for fall of ARPU is of an increased number of customers who are doing casual usage or usage only in incoming. In the past, even incoming customers was fine, because they were getting earlier 20 paisa IUC and subsequently 14 paisa IUC. Now the IUC contribution has also gone down. So we have started a company-wide program, including our sales, marketing, and service teams, to identify customers who are predominantly casual users, incoming users, who continue to appear on VLR but do not generate sufficient revenues. And with these programs, we're seeing a reasonable amount of success. A very large quantum of these subscribers we could recover back in the quarter 3, and we're running almost a war on these customers to make sure to understand why they are not using our network and try to bring them on. And it is not so much about 4G, it's more about the voice side of the business. If you're okay with this answer, then I move to the second part.
Yes, sir. This is helpful.
So as far as cashback offer is concerned, the offer is very straightforward. The customer who buys, let's assume, our previous plan at 357 and above recharge, he becomes entitled to cashback. These are vouchers that are available on our web and our app. When he does the subsequent recharge, there's a particular value above which he has to recharge. When he does subsequent recharge, the credit of the cashback, for example, it is currently 50 rupees into 8. That was the offer that was available, and that 50 rupees will be credited and then accounted for. and we are seeing only a small percentage of these customers are availing of the cashback. And we wait to see, because we just have one quarter have passed, how many of them consume all the yearly charge. But our calculation shows that it's a good retention tool.
Understood. This is helpful. Okay. And the one on the gap between the 4G devices and 4G subs.
Yeah. So as we mentioned that we have added about 38 million 4G handset users. We have over 58 million 4G handset users. And on an overall broadband, we have 105 million overall broadband device users, and we have about close to 36 to 37 million customers who use our 4G services. But a large portion of these device owners also use our voice services. We are making significant attempts to make the non-users of data services to use our network. And the unlimited plan is definitely one of the strategies that has been reasonable success in the last quarter. We added 5.2 million customers in the last quarter who brought with them. The second, obviously, our coverage currently is about 600 million population that we have broadly cover where our broadband services are available. Effort is on as early as possible to expand this coverage. This merger is going to help us to be able to reach to pan India to a billion population. So coverage expansion is an extremely important strategy. Also, secondly, our unlimited remains our strategy. But we are not going to become a discount warrior to be able to make sure that a non-user gets into usage. So we'll use a persuasive power. We'll use our continuous communication to this customer to do that, and we'll try to get him on the digital channels. So those are the efforts that is currently on.
Understood. This is helpful.
Question that the accounting of the cashback is done over the period of the recharge.
Over the sorry, sir.
Over the 8 months, which is the period of the. I mean, whenever there is a cashback which is utilized, it is utilized against the recharge. Whatever be the duration of the recharge, it will be amortized over the same period. So there's a matching of revenue and cost being done.
Okay, so essentially in the quarter in which someone takes a recharge, the ARPU for that quarter will fall. Am I correct? The ARPU for the subscriber for that quarter.
More or less the answer is
down. Yeah, okay.
I think in terms of detail, maybe we can discuss offline, but generally it is amortized. It's not an upfront charge which is being taken.
Understood. Thanks.
Thank you. The next question is from the line of Sanjay Chawla from JM Financial. Please go ahead.
Hi, good evening. Thank you for the opportunity. My first question is, Himanshu, on this whole consolidation which is happening right now. So we have seen Arcom exiting and in November, December, and also Aircel shutting down in 6 circles. So how much of the subscriber or revenue benefit for you is reflecting in the third quarter numbers, and how much more one should expect, how much more is coming up in 4Q, for example? And also, should we build in any meaningful revenue flow from Telenor and Tata Tele customers also whenever their merger gets completed with Bharti? That is the first question.
So, Sanjay, we had a good growth in quarter 3. It's a combination, as we mentioned in our press release, a combination of customers who came in from MNP, as well as this is a seasonally better quarter. Quarter 2, as we have a larger proportion of rural customers, while quarter 3, with the festival season coming back, we get gains from that. So it's a combination of both of these. Beyond that, we won't be able to share with you any specific number.
Should we expect more benefit, in the fourth quarter, or do you think much of the benefit as far as Arcom and Aircel is already there?
Quarter 4 I keep reminding that there is consolidation in the industry. There is also 400 million customers who are currently non-mobile users who have entered the category. So combination of both is happening, and we are expecting. We are very hopeful that the way we had good subscriber addition in quarter 3, the same will continue in quarter 4. But we'll wait to see.
Okay. And my second question is on this whole battle being primarily on the smartphone side, being about, occupying the primary slot. So what is your sense in terms of the share of, Idea 4G SIM cards, that have gone into the primary slot on an incremental basis, how this thing is looking like, let's say, in the third quarter?
We won't have that specific number. We are monitoring it, but we don't have a number and we don't disclose that. And that's a very specific number.
Okay. Could you talk in that case about the penetration of of 4G in terms of the attachment rate of 4G in your device base, 4G device base? Because on an overall basis, you have reported roughly 33% of of your devices, the customers having those devices are also broadband subscribers.
Yes.
And this percentage has gone up in the last 2 quarters compared to first quarter, let's say. So how has this trend been there with regard to 4G alone?
So let me, first and foremost, a very large growth is happening on 4G is a part one. I have to keep reminding that Idea Cellular has been consistently expanding its 4G coverage. We've added over 35,000 or 33 to 35,000 fresh radios during the last 9 months. It allows us to enter newer markets, and the benefit of that continues to come to us, and the prices have become very attractive. So expansion of coverage and attractive prices has helped a lot of our existing customers who are predominantly using voice for us to now start using mobile broadband. And 4G is the vital for growth.
Okay. If I could just squeeze in one more question, how you have obviously certain anticipation of the data traffic growth which is happening. So in the context of this anticipated traffic growth, let's say in FY19, how critical do you think would be the deployment of TDD 2500 within FY19? Or do you think this could be, given the merger related other benefits with regard to FTD, TDD 2500 can wait probably till FY20? What is your sense?
Now we will launch significant number of TDD radios in FY18 in quarter 4 as well as next financial year.
So
to build our overall capacity.
2300 is already being launched, but 2500
launches have already started to happen, and we're getting a good traction.
Okay. Fine. Thank you and all the best.
Thank you. The next question is from the line of Gaurav Malhotra from Citigroup. Please go ahead.
Yeah, hi. Most of my questions have been answered. Just wanted to get a clarification. You mentioned that you've stopped taking the depreciation of the towers which are going to be sold. What about the revenue which would be coming from them, or any rentals which you would have to pay for these towers? Is that being taken in or kept out, or on the above EBITDA it's business as usual?
No, so the simple answer to your question is it is EBITDA business as usual. And in any case, if there was any financing cost, it would also be charged. So the only difference is that in the books of ICISL, there is zero change in accounting. As far as the consolidation is concerned, it is only since the asset is held for sale, it is not depreciated any further. And this is only in the consolidated accounts. Other than that, there is no change at all.
Okay. And just on the pricing, I know we have discussed quite a bit of that, and Himanshu, you did mention about the fact that most of the competition is happening on the 4G front. But, given that now there are price plans at 98 rupees, unlimited voice with some data, and the fact that, the 4G smartphone prices have also started to come down, isn't there a risk that could sort of accelerate the 4G adoption at the bottom end, and sort of, the 2G subscribers which are currently sort of protected from competitive intensity, they also get exposed to that?
I think it's very premature. We'll wait to see how the trends come out. These plans have just been announced, and we'll wait to see the big movement. There are, we have to keep reminding ourselves, India has about 300 million people, 300 million users for mobile broadband, and we have at least additional 500 device owners who don't use at all any broadband services. We wait to see how many of these customers were to migrate to data and how fast. But having said that, we are very much going to participate in the growth of 3G services. So our long-term program, and that is why our focus of the company is to expedite merger, expedite integration of two entities so that it can become unified one entity, expedite two networks to become one unified network, and to be able to expedite refarming of spectrum so that we can utilize the spectrum to be able to build larger capacities. So both coverage expansion for 4G, capacity expansion for 4G with the merger remains the paramount focus of Idea and Vodafone India, and a significant progress has been made, and it is much faster than what we originally anticipated. So while there may be a short-term trends over the next month or two, which we have very little to comment about, but long-term, the company remains focused to expand its 4G coverage. Yes, there is a new operator who's got the first mover advantage, both in coverage and capacity. But we intend to be able to cover both the coverage gap as well as the capacity gap in as short a period as possible.
Okay, thank you.
Thank you. We'll take the next question from the line of Aishwarya Agarwal from Reliance Mutual Fund. Please go ahead.
Thank you. Sir, just want to understand this. We understand from the Jio analyst meet that they will be very aggressive going forward in terms of Jio phone penetration into the market, and the next is probably the way tariffs are declining, and whatever tariff they are offering right now, which is 153, there should be a meaningful cut in that tariff also. So, especially I see that the existing 2G users likely to switch from this feature phone to the Jio phone. So how you perceive that scenario, and how we will be able to, what are the things which will work for us?
Let's go in a systematic manner. Yes. There is definitely the smartphone prices are falling, and the term that we used is 4G feature phone. The old version of 4G feature phone did not get significant response, but what we are seeing on Android operating system, the 4G handset prices, which were earlier in the range of 5,000 to 7,000 rupees, a series of handsets now being launched in the 3,000 to 5,000 price bracket. We are continuously in discussion with the handset manufacturers, and we are seeing a number of handsets in the pipeline which are going to come in the 2,000 to the 4,000 price bracket. So we are quite confident that while a new entrant may bring in his own handsets, the overall industry will bring in lower price 4G handsets. So it is not positive only for one operator; it is positive on an overall basis for the industry, because the industry is focused to make sure that more and more of the existing Indians were to migrate themselves from being pure voice users to be a balanced user of both voice and data. So to help the industry, handset industry, to continue to bring these lower price handsets, we are entering into series of cashback deals. We already have tie-ups with two handset manufacturers, and we are in a discussion with multiple other handset manufacturers. And currently, we are offering 1,500 to 2,000 rupee cashback if the customer were to stay back on our network for a 2 to 3 year time period. So from a pricing perspective, while I mentioned in the previous call that we will not be the discount warrior, but our pricing will be very competitive, both at the consumer recharge end as well as at the support to the handset suppliers. And this will proliferate much more handsets in the system, and we will definitely encourage that proliferation.
Sure. And sure, sir, this is very helpful. And in addition to that, say they are also able to offer the handsets at a cheaper rate. So 1,500 is the price with the cashback. And for any new user to switch from existing handset to the new handset, I mean, they have to upfront it with 1,500. Now making the deal more sweet and keep the prices say 1,000 or less than that, and subsidizing that. Those kind of things. I mean, how you will be able to overcome that, sir? Because I mean, considering the focus on acquiring the market share, it's a huge market is there with the 2G, and they are not able to penetrate it at all. So
don't worry. What we have seen in the last 2017, feature phone still continue to rule the roast. 125 million feature phone sale happened. The cost of material of a 2G feature phone remains very low, in the range of about 50 to 75 rupees only. So that's very, very low, the cost of feature phone. The prices of a feature phone will be available in the 500 to 750 rupee price point. We also are introducing, we're going to support the 2G feature phone market as much we can do as an operator.
Sure, sir. Thank you very much, sir. Yeah, thank you.
Thank you. We'll take the last question from the line of Shivam Saxena from ICICI Bank. Please go ahead.
Yeah, just one question on interest costs have declined for this quarter. Any reason specific?
See, the major benefit is coming from there is a FX difference, which is about again 1.1 billion rupees delta between previous quarter and this quarter.
Okay.
And it is offset by other increases, which are largely, there was one credit of income tax refund which came with interest, which is not there in this quarter. There is some increase on account of higher debt during the quarter, higher average debt.
Mm-hmm.
So the benefit is on account of FX, and the increase in cost is on account of higher debt, and there being an credit last quarter, which is not there in this quarter.
Okay, and one more question on the international terminal charges. I missed the first line of your. What would be the impact on the revenue and the EBITDA international terminal charges?
We said for the period from 1st February to 31st March, impact will be on revenue is 650 million.
Okay.
And on EBITDA it is 400 million.
Okay, thank you. Thank you.
Thank you, ladies and gentlemen. That was the last question. I now hand the conference over to Mr. Himanshu Kapania for closing comments.
Thank you so much. We know that we're going through a little volatile time, but and this phase will also pass. But idea remains a long-term player, and our focus primarily is to do all actions which will help the company build strong network and continue to build its brand. And our focus is to capture maximum growth. India has significant opportunities on mobile sector, and consumers are having a bonanza, and Indian mobile sector are going to see a significant market recovery. We want to capture this growth, and this the work which is happening on merger will continue to be will continue to support us to tap maximum opportunities. Thank you so much for all your questions, and see you in the next quarter.
Thank you. On behalf of Idea Cellular Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.